What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be taking a look at 5 stock picks for the month of January 2025. And these are all stocks that I own. So, the way we're going to start this is I'm going to start off with the most predictable, safest investment, in my opinion, and then go gradually into riskier investments. So, number one on my list is going to be Pepsi. And this one is because not only do I think it's safe, but the P ratio is insanely cheap right now. As you can see, we scroll down here, we can see that we're looking at paying under 22, pretty much 21 times trailing earnings right now, which historically, these last couple years, that's about as cheap as it gets. And then you look at the forward PE ratio, and I think it's only a 17. So we have that going. The two pieces of news for this company is that one, I believe they got pulled out of Costco and replaced with Coke products, which is bad. But the second piece of news is that they replaced Coke at all Subway locations, and that's going to add roughly $700 million to their revenue. So that's the good news. Either way, I think Pepsi is a safe company. And the way I look at this is we have a 3.5% dividend that's being paid out now. And I think I'm going to make money with the shares. So I'm happy to be a Pepsi shareholder. Number two on my list is going to be Nike, which unfortunately I've been putting this one on my list for a long time because ever since last summer when the stock dropped, it's pretty much been on my list because I mean 75 bucks and under, it's just too cheap not to buy it. And I know they're having problems right now because they switched to the direct to consumer business model, but I think hopefully in the next couple months here they turn things around and Nike's a very strong brand. I don't think they're going to have a lot of trouble. They've been through a lot, and hopefully they can get back to that $100 plus share price. So that's going to be pick number two. Number three on my list is going to be Adobe, and this one I like, but my position's a little bit smaller because I think that it's possible the stock keeps falling. If more bad news kicks in, this one I could see falling a little bit more. So there is the threat of some new competition out there, but I still have faith in Adobe because they're just the brand name in so many different products and services. They have an incredible following and customer base, and I still think that they're going to do a fine job with integrating artificial intelligence into their products and services. So I'm not too worried about that, but they have incredible strong market share and brand loyalty. So this one I'm feeling confident with, but I wouldn't buy a lot unless the stock dropped a lot more. Number four on my list is going to be, let's see, the next non-risky one I would say is probably this. This would be Super Microcomputer. This one I started buying in November, right around $20 a share. And then yesterday I picked up a couple more shares. And at the time I was buying, it was very risky because they were at risk of being delisted and they were accused of accounting fraud pretty much because they had not issued their earnings for 2024. And then they hired a new company. The company said there is no accounting fraud taking place. They have yet to issue their earnings over the last 2 quarters of 2024, which right now is a bit of a concern, but I would think they would put that out pretty soon. And I just saw an analyst this morning put a $60 price target on this. My price target when I ran the numbers is about $50 a share, so I will probably start selling at $50. But the stock's just it's still undervalued. Like you run the numbers, you're only paying 9 times earnings or something super cheap. So and I mean, Nvidia just put out news this morning that's supposed to have a huge benefit for SMCI. And I just think this is a solid one. The risk is low because the P ratio is so low. Finally, this is the riskiest one, which is why my position is very small. And that's going to be Celsius Energy Drinks. This one, the valuation has come down a lot because the growth has come down. But I don't know. I could see this one running up again, but as you can see, it's come down a lot to $27 now. And so, I mean, if things got worse though, I could see the stock getting cut in half, really. That's why I don't want to make this a big position. So I could see it going either way. I could see the stock shooting up 50% or dropping 50%, but either way, I'm going to win because if it drops, then I'm going to double my position and I'll be happy to do that at that risk to reward profile. But right now, it's still trading at, I believe, 28 times earnings or something like that, which is, that's, I could see it getting cheaper than that. So this is where I'm at with Celsius. But those are my top 5 stock picks for January. Let me know what you guys think down below, and I will catch you in the next video.